Tom, let's just dive in on the latest turn of events with Vladimir Putin deciding to go ahead and recognize the separatist regions of East Ukraine. Crude oil already in rally mode. Where are we going from here, and just how significant is this?
Well, yeah, it's great to hear, obviously the details about the oil and gas market. We haven't seen price levels like this for Brent crude out of the North Sea since 2013. So almost a decade in terms of price levels here. But aside to oil and gas, I mean, Russia is a massive exporter of wheat. And, the wheat market had already been seeing potentially great crops coming out of Russia this year and out of Europe. So if there's any embargoes or problems there with Russia, it's going to be also food prices impacted as well as the energy bills at home. Also nickel. Russia is a massive exporter of nickel. We're already seeing very low inventories of nickel, and prices have been like quadruple 2019 prices because of electric vehicle production and the reliance of nickel in battery technology. So there's quite a broad scope of impact here if things were to escalate further.
Tom, is there a way for an investor to make money on this, or a trader for that matter?
Well, I think the volatility traders definitely be quids in there. We certainly are looking for some good volatility in the markets to continue. So some option strategies there on volatility probably is the safest way. I think in terms of hedging, we are at record high prices. I was just looking at the World Bank's reports. They publish a monthly little thing they call the pink sheet, which looks at a whole load of commodities all over the world. Everything is higher than pre-pandemic levels, and some considerably so. Aluminium, nickel for one, and also a lot of agricultural markets are all higher. So we're already at high prices. The upside is quite dependent on these tensions. So I'd be a nervous buyer of futures, but looking, if I had to protect something, using calls there. For investors, I think volatility strategies look the best bet at the moment, because we're definitely guaranteed some of that.
Yeah, as you say, there's already the shortage for nickel when it comes to the LME. I'm wondering, is it possible to discern at what point in this cycle, or some people would say a super cycle, would be for some of these metals?
Well, electric vehicle production also with commitments on climate change, etc., post all the Paris climate change meetings, etc., that's, until we find alternative large-scale battery technology, nickel's going to be in demand there, and there's only a few places which produces large quantities of that. In terms of inflation, hopefully that'll peak around the middle of this year. The other thing which might dampen the upside of commodity prices, if there isn't any big tensions with Ukraine and Russia carrying on, would be the fact that the US dollar is going back up. If we look at the US dollar index futures, that is ticking back up, trending higher. Obviously, looking at Fed rates coming up again this year. Some of that's already factored in, of course. But US dollar going higher does tend to put some limit on the rallies in commodity prices. That might slow things down a little bit.